Everybody knows that this is going to be 75 basis points. I think it would be breaking news if it was anything but everyone is waiting to hear what the next step is going to be and what the tone of the Fed is. What are you hoping to hear? What do you think is likely?
So you're 100% right. 75 basis points clearly in the bag. I think what we're looking for is indications that the Fed will moderate its hiking cycle from here. And instead of going in 75 basis point increments, moving tighter, but in more standard increments that we've been used to historically. So I'm looking for language that would suggest that the Fed's going to say that 75 basis points is an extraordinary amount to hike at any one given meeting, and that they'll be moderating from there, albeit continuing to hike further and further into 2023.
Okay, so what does that tell you? Let's say that they do something that explicit and say we're going to moderate from here. Is that really a pivot or a pause, or are they going to then emphasize that, by the way, not only are we going to continue hiking rates, we're going to keep those rates higher for a much longer time? If that's the message, how do the markets react?
So I agree. I don't think it is a pivot, and I don't think it's a pause. As of right now, the market's pricing in a combined 200 basis points of hiking between now and the March meeting. And the market's also pricing in around 50 basis points of cuts in the second half of 2023. My guess is that the Fed's going to move more or less in line with how the market is expecting the next several months to look, but I think is going to be reticent to have the market continuing to price those cuts. That's obviously the market pricing in a decent probability of a recession emerging as we get into 23, with the Fed's hands being forced to then cut to spur growth. I think, as you probably know, our own forecast is for another 175 basis points of combined tightening, and then a pause of activity. We see roughly a 1 in 3 chance of there being a recession in 2023.
So that doesn't necessarily sound like you're in the camp that thinks they're going to cut 50 basis points in the second half of next year. If there's no recession, why in the world would they do that?
I would agree. I think the U.S. economy has proven itself to be pretty darn resilient at higher rates. And I think I have an expectation that the U.S. economy will continue to be resilient. That probably means inflation comes down slowly. It probably gives more credence to the soft landing thesis, and also I think gives credence to a thesis that interest rates will remain fairly stable at more elevated levels throughout 2023.
So we're in that weird period where good news can sometimes mean bad news, because if the economy's doing okay, if the jobs market's okay, that means the Fed might have to continue to keep rates high, continue to hike. How do you play it all out? If they don't cut rates next year, is that good news or bad news? What do you do when it comes to investing right now, either in the bond market or in the stock market?
Well, I think that even with an environment where we see continued growth, I think that there's real evidence that inflation can come down in 2023. I don't think it's going to come down dramatically. I don't think it's going to come down super fast as well. But I think there's an opportunity that the Fed really has to thread the needle here and engineer a soft landing, continued growth, and a gradual closing of, for example, the jobs workers gap, without tipping the U.S. into a meaningful recession. And I think clearly, even if they do over-tighten and we move into a recessionary phase, I think that could be fairly short, and I think that could be fairly narrow. So in terms of opportunities, I think that fixed income will continue to be a place that will attract capital in 2023. It's obviously been a tough year in 2022, but given the level of yields that we've emerged to now, I'd expect the capital flows that have been sharply negative in 22 to be reversed and become somewhat of a tailwind for fixed income in 23.